Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the Russell 2000. We're going to take a look at Sprint and T-Mobile since they are sparking up their merger talk again, and then we're going to look at some small caps. Okay, so first up is IWM, the Russell 2000. As you can see here, it had a huge day today, closed up nearly 2%, back above 50 on RSI. You want to see it stay above that level, back above 50 on Fasto. And so the big thing today was it closed back above the 150-day simple moving averages in this 152.50 to 153 resistance zone, and then it also closed just above the middle Bollinger Band at 153.27, and so that's going to be the big level going forward. So candles forming above that middle Bollinger Band, which is also the 20-day simple moving average at 153.27, signals the possible start of a new uptrend, similar to back here when it closed above and it got moving, similar to back here when the candles are above, signals an uptrend. It tried to get an uptrend going here, and then it pulled back, and then it finally did in March. And so now here we are again back at the middle Bollinger Band trying to get that uptrend going. This is the best that the Russell 2000 has looked since the big pullback, considering this is the first close above the middle Bollinger Band since back here in March. Okay, so if it pulls back below that 50 and 100-day simple moving average, if you see it drop below 152.80, that will be a red flag. In order to to stay bullish here, it's going to need to stay above EMA 4 and 8, currently in this 152 support zone. If it drops below 152, that's going to be a red flag. Okay, let's look at the IWM weekly chart here, and you can see the same things happening on the weekly chart. It's hitting the middle Bollinger Band currently at 153.43. So if that 20-week moving average can turn into support, that would signal the start of a new uptrend, or you could say the continuation of this previous uptrend. It basically closed below the middle Bollinger Band here in March, and it's been struggling to get back above. And so if there's a weekly close above 153.43, that would be extremely bullish. If it remains resistance, that signals more consolidation, possible downside risk. Okay, it needs to stay above EMAs 4 and 8 and hold that 152.50 support zone. Okay, let's take a look at Sprint. So Sprint had a huge day today, closed up 17% on this merger news with T-Mobile, and you can see now our RSI is back above 70 for the first time in many months. You've got Fasto heating up at 75. Check out Plus DI here. It had a parabolic spike. Okay, so the bulls just really took control today. You could tell that there was some the chart was heating up last week. You can see it got above the middle Bollinger Band and it held that level. So obviously some people must have known there's some news coming, and then boom, today the big news happened. And then notice how it had been in a multi-month downward channel. It broke above that level today and above the green line, which is the 50-day simple moving average at 524. Okay, so that's the big level to turn into support. That's the green line. If it pulls back down to that level. Now the big level to hold if the candles work back into the bands is right here, the gold line, and then the high, the gold line here, which is the 100-day simple moving average, and then the high close here from February. They're both lined up here at about 550. So you can see the 100-day simple moving average over here at 550. If the candles do pull back in the band, if it drops below this 590 resistance, this was resistance, the 590 zone from back in December and January. If it drops back below, that would be a red flag, and the candles could work back into the bands. And if that happens, EMA 4 is way down here at the 100-day simple moving average. So the downside risk is it pulls back into and tests 550. If it stays above 590, then you want to see a break above this high close from back here in November, which is around 625, and then that would set up a 200-day simple moving average at 664 resistance test. Okay, so yeah, so it's working on it. It has a huge volume spike today. We'll see if this was a one-day move or if it can get a multi-day run here. As you can see, it had the big push where all the action happened in these two candles here, and then it consolidated. And so going forward, it needs to get above above 605, and that's the EMA 4 here at 605. If you can get above that level, then the 620 resistance zone, this high close here, is the big level to break. Above 620 signals it wants to head higher. If it drops below $6, that would signal downside risk. You know, if that EMA 13 broke, the risk is it drops down to that middle Bollinger Band at 581. Now, if it did break below 581, then you're talking about possible 50 simple moving average support test, which would be way down here at 544. Okay, let's take a look at T-Mobile. Well, T-Mobile, you know, didn't have as big a day, but it did have a nice day for this stock. It did close up nearly 2%, and now you have RSI at 53. Check out the bullish crossover here with the green line crossing the red and the black line to the upside. That's plus DI is the green line, the black line's ADX, and the red line's minus DI. So crossing above is a signal the bulls are heating up. Okay, so check out how it you know, all the moving averages are converged in the same zone here. Okay, so it closed today back above EMA's 4, 8, and 13, the middle Bollinger Band, which is the dotted purple line, and then it also closed above this red line, which is the 200-day simple moving average at 35.75. Okay, so that's the big level right there to stay above, and then it's hitting the 100 and 50-day simple moving averages, and it tested the 300-day simple moving average up here. So it has to get above 36 and then 36.50. So those are the two big levels. You know, above 36 puts 36.50 on deck, and then as you can see here, this 300-day simple moving average has been tough to break. If it hits that 36.50 and then closes above, that's been the sell zone, so keep that in mind. Now, if for some reason that level turned into support, that would be a bullish change in trend, and then it could possibly run back up and test this 37 level. Notice there was a big volume spike behind the move today, but that upper wick on today's candle did show some profit taking. Okay, let's take a look at a marijuana sector stock here. This is ticker symbol CRON. This is Cronus Group. Okay, so this is the Canadian marijuana stock that now trades on the NASDAQ. And so this is one of the big dogs. And so, yeah, you can see it's heating up. It's had this big downtrend. Notice it's holding support from February. So very similar to the indices. You know, this dropped on the down in February, and then it held up in March, and then in April it's just really pulled back. You know, it started the downtrend in March. It didn't have that big spike like we had with the you know, the tech stocks and with the indices, and but it did have this prolonged downtrend. And so today there was finally a close above EMA's 4 and 8. That's a first close above since over here on March the 19th. Okay, every single one of these candles here is closing below that pink line, and so today this is signaling a bullish change in trend. Now tomorrow it has to get above that gold line and that orange line. That's the EMA 13 and the 100-day simple moving average. If it can close above 660, then that middle Bollinger Band at 707 is on deck. And then once it finally turns this green line, the 50-day simple moving average back into support at 756, that's when it can get a new uptrend going. Notice that these green dots here flip below the candles. That's parabolic SAR. SAR stands for stop and reverse. And so it's a signal that this downtrend is possibly stopping and a new uptrend could be beginning. Now that all depends on whether or not EMA 4 holds here. If it stays above 6, that signals more upside. If it drops below 6, that'll signal downside risk. As you can see, holding when candles are forming below EMA 4 signals, you know, that you know, there's downside risk. Notice that when these green dots are below the candles, the share price is heading higher, and then when they get above, it's heading down. Notice over here, below the candles, it's heading higher. The dots get above, it's heading down. And so this is the day of the trend change, possible trend change. It's all about breaking that 660 resistance zone, so keep an eye on it. And yeah, check out how the bigger volume days are green, and so that's always a good sign if you're a bull. So check out how the big volume spikes are green here, right? And so yeah, you know, you have the big green, you know, smaller red days. It looks like people are loading possibly for that next run. Keep in mind, Canada is supposed to be legalizing marijuana in July, so there should be a pre-legalization rally happening at some point. We are monitoring the situation, and we will be posting charts and keeping people updated on the stocks that are in play in the sector. Okay, now let's take a look at some of these, some more of these small cap stocks. Take a look at LODE, closed up 47% today. It was one of the big winners. Yeah, it had a nice move. This was a nice move today. Alerts were put out in our chat, and we were looking for a break above this 50-day simple moving average. That did happen. It got above the 50 and the 100-day simple moving averages, and it closed above both levels. So that was very bullish. The green and the gold lines. So if it can stay above 35, that's going to signal it wants to head higher. And then you're looking for a run back up into the 40s. It has to break through this prior resistance zone. You can see this was support, and now it's turning into resistance. And then if it can bust through, it's this high close here on the 29th of January will be the big level to break. This January high close around 46 or so, this 45 to 46 level. So yeah, so going forward, LODE trading above 35 signals upside potential. If it drops below, you could see that 50-day simple moving average. That needs to hold. The downside risk is there's a gap between high of day yesterday and low of day today. So if it did drop below that 50-day simple moving average, it could drop down to that middle Bollinger Band at 27 and test the gap. Notice giant volume spike behind the move today. So we'll see if this can get a multi-day run going. This was the first day of the rally. We'll see if this is just a one-day move or if it's going to keep pushing higher. Okay, let's take a look at KONE. Okay, so this, we kept getting our stock bot kept on alerting yesterday that this was getting halted on the run, and you could see yesterday it had the big run with the big gnarly pullback in the long upper wick, and so yeah, obviously there was some dilution and profit taking and all that kind of stuff for this thinly traded stock. Check out how it on an average daily basis hardly any shares trade, and then today there was big follow through again, and so yeah, they've unloaded some serious shares, trading nearly 9 million shares today with that long upper wick. There's obviously some major dilution going on, but people are loading, and yeah, is this going to be it? A 2-day move? It would be very rare for this to have another big update, but you never know. I would be looking for a pullback if it fails to get above this open here on this big black candle, and so basically it has to get above this $8 resistance zone. Trading below this 750 is going to be a red flag. Red flag if it can't get above 8. There's big downside risk that it could drop all the way down here to the EMA4 at 578. The upper Bollinger Band's down here below $6. So that would be a big haircut if the candles did work back into the bands. You'll know that it's not looking good to the downside if it pulls below this January high close resistance level. It needs to stay above that level now that it's closed above. Okay, so that's the highest recent close, and so it looks like it wants to push higher, but it has to break above 8, hold 650, drops below. You're looking at possible 575 support test. A red flag I'm seeing down here is there is a gap between high of day on Friday and low of day on Monday, and so if this did work back, you could see it come all the way back to fill that gap. If you look here on the weekly chart for KONE, you can see here this is a big week this week. Look at the volume bar. I mean, this is the one of the largest volume days probably in the history of the stock. One of the top volume days. You can see it's rivaling back here in 2016. There were only 2 days in the last 3 years that had a larger volume, and so yeah, you're looking at a big breakout this week. Now this week's candle will not set until the closing bell on Friday, so it's going to be really important that it stays above this high close. It has to stay above 6. If it pulls back below 6, that would be a red flag. Now, if it did close above 6 for the week, that would be bullish. You can see this October high close around 650 is going to be a big level to break. You can see the 8 resistance was from back here in August of 2016. And if it can close above that 8 level for the week, then you're talking about this 10 high close from back here in July of 2016. So those are the upward targets. Notice this week's candle is pushing through that upper Bollinger Band. Many times the candles will work back into the bands. Over here, it closed above the upper Bollinger Band and it kept pushing higher. So we'll see if it can do that. If they do work into the bands, EMA4 is down here at 563. If you look at the 15-minute chart for KONE, you can see here it came up here and it hit this, it had the climax spike. This is what we call a climax spike. It ran up, it had the big volume bar, followed by the red candle, and the candle's working back into the bands. The close below EMA4 was signaling it was cooling down. These were a lock-in gains signal, similar to back here, when you had the big push and then it pulled back. pullback. This is the the signal that if you were riding early, lock them in, and then riding early, lock them in, and then now once again there is downside risk with the close below the middle Bollinger Band at 763. If 763 turns into resistance tomorrow, you could see a drop down to this 50 simple moving average at 686. Now that would have to hold. If that broke, that would be big downside risk, and you could see a drop down to this 560 to 575 zone and test that 100 simple moving average. Okay, let's take a look at CRIS. Closed up nearly 31% today. Nice move. It's above 50 on RSI, so the chart's heating up above 50 on Fasto. You've got that bullish crossover we talked about earlier on ADX. These are all signals that the chart is heating up. Okay, so this has been in a big nasty pullback. One thing that's catching my eye here are these white candles are followed by red candles. Each one of them. So during the pullback, each white candle has been followed by a red candle. Is that pattern going to continue, or is it finally going to form two green volume bars and two white candles in a row? So we'll be keeping an eye out for a bullish change in trend. One clue that it could happen is it did close today above EMA's 4, 8, and 13 and that 50-day simple moving average. All these candles were riding below EMA 4. This is the first close above since back here when it was still in an uptrend, and so it ran all the way up to the top of the lower Bollinger Band channel, which is the middle Bollinger Band currently, middle Bollinger Band currently at 670, 67.6, basically 60. We'll say call it 68 cents, and so it needs to turn that level into support, and then it has to break this 100-day simple moving average at 70 cents. Notice how these candles here, it hit this gold line and that signaled the top. Once again, it's hitting that level. If it fails to get it, close above that level and turn into support, this is once again going to signal the top of the bounce. Now, if it does close above and holds that level, that'll be a bullish change in trend, and we'll be looking for a run up to 80, possibly back up to dollar land. Okay, let's look at GSAT. Closed up 21% today. Nice move. It's the chart's heating up. Check it out down here. It's been beaten up. It has a really nasty downtrend. Middle Bollinger Band broke. Downtrend. Tried to turn the middle Bollinger Band into support. Failed. Downtrend. Now it's back up to the middle Bollinger Band. If it holds, then it could get an uptrend going. Is it just going to repeat the process again? Fail to hold and drop? I mean, the odds are that's what's going to happen because that's been the pattern. But keep an eye out for a bullish change in trend. If it stays above 69, the middle Bollinger Band dotted purple line, then it's in play. If it drops below 69, it will be a risk to hold. It has to stay above that level now if you want to trade long. Notice there is this crossover here. The pink line starting to cross the line to the upside. EMA 4, EMA 8 crossover. That's an early reversal signal. But it's just really all about staying above 69. If that level holds, then the target would be up here at that 50-day simple moving average at 85. So keep an eye on GSAT. We'll see if it can follow through. Another one to look at is CRC. This is an energy exploration stock. After that reverse split, it's trading much higher now. It's at 2050. It had a reverse split a little while ago and several months ago, but that jacked the share price up. But notice it still had big. It's got really big volume up here. It has a really nice uptrend going. It held this. The 300-day simple moving average support zone, held this 1350 to 14 level. It got above the middle Bollinger Band. It got above the 50 and 100-day simple moving averages, the gold and green line, and it's pushing higher today. Today it closed above the February close here. Okay, so basically you want to see it stay above 2050, break this 21, and continue heading higher. If it continues on this trajectory, it's heading back up to 25 bucks. This 24 to 25 zone was the high close from January. It looks like it's working its way back up to that level. If it stalls out here at 20 to 2050, you could see EMA 4 at 1897 tested. As long as it's riding EMA's 4 and 8 support, if you're a longer term swing trader, the signal is to keep riding. Everybody's really bullish on the energy sector right now. Check out that volume spike. Besides these two red candles, it's the largest volume since back in November. So really big volume behind the move today. So keep an eye on CRC. We'll see if it can keep going. Take a look at THM. Another sector that's been heating up is the gold miners. We've been having some gold stocks heating up, some mining stocks heating up, and you can see here with THM, it's a thinly traded stock. It did get some volume today. This looks like the load here. They loaded up bigly, right? Big time. and then now we've got this nice spike here today. So basically, after creating this V-shaped bottom down here in December, it's been moving on super light volume, but it's worked its way back up. Okay, and so now it's filled the jar back to this September resistance zone. Keep an eye on it. If it can close above 65 and then close above 66, that's going to be a signal that it wants to keep pushing higher. It did close above the upper Bollinger Band today. It has a tendency of working back into the bands when that happens. Notice how these white candles above the purple line are followed by red candles, and so that's likely to happen again here before you could see it taking a pause before the next push higher. And so if it does, 58 is the key level to hold. As long as this keeps a good uptrend going, this has a good chance of busting through 66. I'll show you on the weekly chart what I'm talking about. So look at that big volume in March. That's a huge volume spike for this stock. Okay, this is a really thinly traded stock, right? This is a weekly chart. Each candle represents 1 week of trading, and you can see this week it's breaking above the gold line. That's the 50-week moving average at 60. So if it closes above 60 for the week, and then it closes above this September close from 2017, that's going to be really bullish for the week. And then it looks like it could work its way up to the 300-week moving average, currently at 75. That's lining up with this high close from January. It looks like that's where it's headed if it can stay above 60 and turn the 65 level into support. So keep an eye on THM. And then finally, let's look at LEDS here. This is another thinly traded stock. We have quite a few of these that are trading on no volume, but they're just pushing it higher every day. There's no selling pressure. There's quite a few penny stocks like this. I'm not big on the low volume stocks personally, but I know we have people in the chat that like to trade these stocks. And yeah, there's been some good examples recently of where it's paid off for people with patience. Look at this chart. This is what I'm talking about. I mean, look at these volume bars. Hardly any volume, but this thing's gone from down here at around 275 or so, all the way up here to 440 on very light volume. No pressure selling at all. Just walking its way up. Well, today it closed above the 50 and 100-day simple moving averages. Now it's back in this channel. You can see there was this multi-week sideways channel. It's back in the channel. It's in the middle of the channel. The top of the channel is here in March. If it can close above this 450 resistance zone, and you see it trading above 450, 460, that's a signal that it wants to head higher, and it could possibly run back up to 5. That was resistance from back here in January. Yeah, after this multi-day run, though, I would not want to be a chaser on a thinly traded stock like this. I'm just showing it to you. This is just, this was alerted in our chat when it was down here, and it just kept pushing higher. And yeah, there's quite a few of these type of stocks if you like to play, the penny stocks, and this is your cup of tea. Keep an eye out for them. They've been, walking some of these higher. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. I'll post the link below the YouTube video. Thank you.